Hey guys, Dr. Greg here. Yeah, I was trying to record on this computer and I didn't press the record button. So I'm going to be doing this again. Welcome to Bulls versus Bears Weekly Forex Forecast. My name is Dr. Greg McLeod. And boy, you missed a really great show because I did press the record button. Um, anyway, I was using this software program called ClipChamp. And let me just double check to see if I recorded it again and make sure. I guess it says to stop sharing, but I think it's going now. Okay. So anyway, welcome. I hope you guys had a great weekend. Sorry I missed you last week. We had a fantastic, uh, you know, Las Vegas Mastermind where I spent 3 days with my forex community, with members of my community who showed up, and it was really awesome being able to spend time with them. And we got the chance to trade with each other and have dinner with each other. You know, we were so it was fantastic food. All you can eat is meat coming everywhere, and those are all the people run numbers, having a great time, which was really cool. Being able to break bread with them, and you know, and have some fun, and actually do a lot of great things and learn about go on a deep dive of the Pip and Run strategy. So we all got together, our T-shirts, and at a beautiful mansion in Las Vegas, and we traded the overnight session. We traded the London session. We had early bird session where where my students came, and we traded early in the morning, and it was a great event. And we're able to have some adult beverages and share and have a great time. So maybe next time you can join us. Our next one, it's actually in Mexico. I mean, we had our students that got com- uh, completion certificates. There's Arnie. Arnie was at my first Las Vegas event that was held by the brokerage back in 2010, and so we're a little older, a little heavier, um, but I traded live back then, and I traded live now. So some things never change, right? And so it was good to see Arnie again in person, and he it was one of the original Pippin runners, and Carol was there, looking cute, getting her certificate. It was really nice spending time with her, and she was brand new to trading, and she had a deep understanding about the markets. And then we had William, all the way from Florida, and he was getting some insights too, and he has a really good golf swing. We would Top Golf. And you get Jeff, awesome meeting him and seeing him in person for the first time. And it was like family because we talked to each other all the time as part of mentorship. You know, they had Derek. Derek was doing really well, trading gold with with Joe. We have Hal. He was doing fantastic as well. And there's Joe, Tall Joe. I call him the Gold Man, Goldfinger, because he was crushing gold, like $14,000 in gold. This is really awesome. Nitin, awesome, awesome dude. Got to meet and sat next to him for dinner, and talked about his trading, how it's improved. Daniel, we had some awesome, had a game of pool, and also had he is a pool shark. Don't bet any money with this guy. He'll take your money. And then you had Joel and Ashley Garza, really from Houston, Texas. They came to the event, husband and wife learning trading together, a strong family for God, and they were crushing the markets. And this is the gold card which we saw at the Shelby Museum in Las Vegas, and he has the gold, the Midas touch. He just traded gold. He was sitting on the couch trading gold. He was sick part of the time, but he made up for it. He made more than what the cost of the event. He made it back and more. So that was it. So we're pretty happy after a good day of trading. Get to go to the museum and hang out, and it's really cool. And maybe try to buy that car, right? So anyway, that's that. Our next event before to be Mexico, right? Let's get into the my market heat map. It's arrangement of currency pairs by percentage change. Tells you what's hopping, what's popping, what's dropping, and what's not. And you can get it for 50% off right now. But it has heat maps, equity heat maps, commodity heat map, crypto heat map, forex majors, all forex pairs, and all instruments heat maps. And I built this myself. I actually had some programmers build it because I wanted the brokerage. I thought, they would help traders. When we used it, we made a lot of money with it. Brokerage didn't want to do it. They said, "No, Greg, we don't think it's a good idea." It's not a good idea to create something which will show people what's active in the market, when to stay out of the market. Like right now, it's gray. We say gray, stay away. Red's a downtrend. Green's an uptrend, right? So just follow the colors, right? And there's a crypto heat map. See, the cryptos are actually, and the cryptos are red, and they're moving on down, right? I think Bitcoin is going to go down. The sentiment, a lot of people are short, but a lot of people are long Bitcoin. But we're going to show you some chart patterns that are a little bit different, right? So let's get to the economic calendar, which is also part of the heat map. It's a full suite of tools. And you say, well, Greg, I can go to Forex Factory, I can go here, I can go there, I can go to CNBC, I can go to investing.com, I can go to finwiz.com. Yeah, you can go to all those different tabs, but you know what I have? I have all the information in one spot. Traders tools, tutorials, and I have all those things, heat maps right here, all in one simple, easy to see spot. So, and how this, one of the most underused tools on the heat map is the economic calendar. The economic calendar really tells me what to trade. People say, well, what do I trade, Gray? I don't know what to trade. It's real simple. We look at the heat map. We look at what's going on, what the fun of flags. Remember fun of flags in the Big Bang Theory show with Sheldon and his girlfriend Amy, and they look at the flags. We look at the flags here, and we had some Australian data that came out. RBA minutes came out. We have Chinese growth. And so China is one of the largest trading partners of Australia and New Zealand. So you can look at the Australian dollar and New Zealand dollar and look at that as possible trading ideas. In fact, we can look at let's look at AUD USD now. We can go there, but we actually can go to the heat map. Heat map actually has charts. We go to charts. They're trading view charts, a lighter version. But it loads really fast, and if you don't want to jump around, you just go ahead. Oh man, what went on with the Australian dollar? Oh, not there. We want to go to this is a Sage trade. If you want charts, we go to AUD USD. We just had the minutes that just came out. Are they coming out? And we can see that we're at 67.08. Go to an hour chart, see, this is a big drop in the consolidation. So it's not really moving. Everything's gone sideways, right? That's how fast we can just go right to the different pieces of data there. We go back to the economic calendar, and we have Chinese data coming out at 10 p.m. tomorrow. And we have the pound. Look at the flag. So there's the UK. UK data comes out on Tuesday. So we want to look to at the pound, look at the chart, and we want to put that on our watch list. We want to look at pound dollar, pound yen, put those on our watch list. The euro, we want to put that on our watch list. There's data coming out, DEW Economic Sentiment Index, right? Now, trading the news announcement itself is kind of dangerous, kind of risky, but you want to maybe wait an hour after the announcement. That's called a news fade trade. And the news fade trade will show you basically the price will go in one direction during news and then they'll reverse it. And so that will be a safe time to enter, especially if you don't have the pip and run predictive indicators to forecast the market and get you in 4 or 5 bars ahead of the news. If you don't have that, then don't trade the news, okay? Just wait afterwards, but several hours ahead of the news, or a day before the news, then look at the pound right now, right? Right now it's Sunday, Monday. Take a look at the pound and see if where there's a possible entry. Uh, you can trade it up until that time, right? And then afterwards, wait an hour and trade after it. This is where the action is going to be. It's going to be in the pound. It's going to be in the euro. It's going to be in the Canadian dollar. It's going to be in the U.S. dollar, or the euro versus U.S. dollar, or dollar Swiss, or dollar CAD, right? And now Japanese data, though, I don't really pay attention to Japanese data. They are an export nation, and they want their currency weak because a weak currency makes their Sony PlayStations, their Toyota Tacomas, and their Lexuses all cheaper. So it stimulates exports to have a lower currency. So they actively manipulate their currency in order to make it weak. So it doesn't matter how good the announcement is or the economy, it will do little when you have the government, devaluing their. Then what they do is they buy U.S. treasuries and they buy U.S. debt, and that creates a large supply of their currency, makes it artificially low. So I was actually talking to someone who worked for a car dealership, and they told a U.S. car dealership, a Buick dealership, and he told me that the currency manipulation that the Japanese do is almost equal to $5,000. When they give you those programs, you can either get 2% APR or $5,000 cash back. Well, the Japanese cars never do that. They never do that because they basically are giving you, the currency. The whole country has devalued their currency to give you that type of a discount, right? And their stuff is still expensive, right? Because it's high in demand. But we have these announcements, and you can look at granular. Well, Greg, what do these numbers mean? I am not really looking at what they mean. I'm just looking at that they're happening, because currencies are like little sailboats in the water, right? They don't move unless they have wind blowing in their sails. The wind comes from economic news announcements around the country that these currencies represent, right? So the pound moves because the UK data comes out, blows the pound, right? So he said, well, gee, I want to trade Canadian dollar. Well, you might not get the same bang for your buck, right? The Canadian dollar may be dead in the water during that day or leading up to that day, but the pound will be active because they're not going to wait till the last minute to enter the trade. They're going to be positioning themselves hours and maybe a day before the trade. And that'll create the movement up and down. And then when the announcement comes out, then you'll get some fake move to the wrong side, and they'll take it to another direction, create some type of liquidity sweep or whatever. But there's activity leading maybe a day before the announcement, leading up to the announcement, and an hour afterwards. So unless you have the pip and run method for forecasting and predicting the market and getting in bars ahead of time, I wouldn't trade the actual announcement. I would trade up to the announcement, and then I would wait an hour after that. But if you have the pip and run system, you can trade before, the during, and the after. Okay. So those are the currencies that we're going to be looking at. But also, I'll throw some gold, and then we'll look at gold. We'll also look at Bitcoin as well. Okay, let's get to the charts. Okay, so first thing I'm going to look at is the DXY, our index. The DXY but Greg, we don't even trade DXY. How do you trade DXY? The major currency pairs are called majors because they trade against their currencies that trade against the US dollar. And those are the Aussie dollar, pound dollar, dollar Swiss, dollar CAD, dollar yen. Okay. But so here, DXY and USD are the same. The DXY is a basket of currencies versus the US dollar is an index. And so currencies will move in the opposite direction of the dollar index. If the dollar is strong, that means all the other currencies are going to be weak, right? And if the dollar is weak, that means all the other currencies can be strong. So it's really simple. If you plot this US dollar index on your chart, and then you can see that, wow, this thing is moving down. Like hide, remove, right? See, we're moving down. So if the dollar is moving down, that means the other currencies are moving up. We can go. So bulls versus bears, I am bearish the dollar. And you can see that we've been moving down, right? There is some support here, though. So we could maybe see a little bit of a dollar bounce, a short-term bounce. So we're sitting at this old low. But we could bust through that and actually resume the dollar downtrend. Okay. So after the dollar index, I want to check the euro. The euro is called the anti-dollar. I want to see what the mirror of the dollar looks like. Now we can trade this. Seasonally, around this time of the year, the euro moves in an uptrend. Okay. And you can go back several years, right? I'm going to remove all the drawings here. And we can see April, we usually we're like in the 109 area. We can probably see 110. We have on this monthly chart, we have higher highs and higher lows. I mean, we got to a low of 95, and we had a previous support that was tested over and over again. And finally, we broke that support, came back. So all the people who were stuck here are like crying, oh, please come back down. And it's not. Once the market traps somebody on the downside, they'll just keep watching until they're stopped out, right? We have an uptrend, steep uptrend, showing that there's buying. And this happens this is, so right now we're here, right? But, we go back here, we've, every March, March to April, this is 2017, March to April, we get a move higher, right? If you go back, right, even 2019, 2019 was like the exception. We were just starting the pandemic, right? We went to 2020. But if you go back some time, like 2013 or so, see, this is April, and we moved up from here. And here, look, this is April 2009 uptrend. Seasonally, the European economy strengthens and the euro gets stronger. Whether you go back 2010, go back here. Like this is 2006, April to March, March to April. We get these up moves, right? Where is the March? Okay, here, 2010, we had Brexit around that time, right? And then here we had, look, April, March, uptrend. It's small, but this is a monthly chart, so it's a lot of pips there, right? Right. So I'm saying these are seasonalities that happen repeatedly. And so when you have this repeated price action, well, then it gives you a little more confidence to get in the market. So we're in a seasonal upcycle on the euro, go down to a weekly, higher highs and higher lows, go to a daily, bulls versus bears, we're bullish. However, we are seeing a double top, maybe got a break, a little bit of a break higher. So we might get a short-term pullback tonight, and in the morning tomorrow. But look to buy a discount on a pullback. Look for a pullback to the trend line for a possible continuation up. So short-term bearish, but for the rest of the week, I'm bullish the euro. You can even see that we're already coming on down, and the trend line will be ready for bear. The 109 whole number round number area, it seems like a good place, even down to 108.44. Look to buy a discount. Don't fire your wad off without wait for the setup. And be patient. Patience is for hospitals. No, but patience will keep you out of the hospital, right? I mean, there's yeah, we trade this during the Mastermind withdrawals. Okay, so here we go. So here's the pound going back to a monthly chart, and you can see we're in uptrend as well. Well, because it's the UK has their own currency, but they're basically on the same continent. It's still Europe, right? They just have their own banking and monetary system, and they have their own sovereignty. They don't answer to the ECB. So usually countries which are geographically similar, like Australia and New Zealand, their economies are similar as well and benefit from the same factors. So we have this higher high and higher low, kind of topping, a little pullback to the trend line. Trend line support comes in like around 122.32 area. Look for a discount. Look for price to come down. Short-term bearish, again, like the euro. Short-term bearish. But, turn around Tuesday, probably Tuesday evening, we'll be ready to go with a north move. We might be hitting some support here too. So bulls versus bears, short-term bearish. After Tuesday, look for a rally higher. All right. We look at the pound, look at the euro. Aussie dollar, we think we did look at that. Look at the Chinese data. It's not really moving a whole lot. Move all drawings. We've been stuck in this range for a really long time. Big long wicks, and we haven't really gone anywhere. Maybe we have can you imagine being in this for a whole month and all you have is a spinning top out of this? It's like, oh, wow, boring. But, and Kiwi dollar isn't doing anything either. It's kind of neutral. I tell you what, when you have Kiwi dollar neutral and Aussie dollar slightly bullish, you usually get a really good trend on Aussie Kiwi, right? So this has a move at aim, and look, we bounced off a significant low, and then we moved sideways. This is a whole month of sideways movement in two candles, right? So usually, if Kiwi is moving sideways, Aussie Kiwi is in an uptrend. AUDNZD. I know it's not what currency I talk about or cover. AUDNZD right there, right? And you can see, remove all drawings, that this thing is on fire. Go to the weekly chart, big move up. Go to a daily chart, higher highs and higher lows. When you have an uptrend on the daily, your lower turn, just wait for your lower time frames to go bearish and then jump in. That's how you buy the dip. You want to buy the dumpiest house in the best neighborhood. So it has value, right? You buy a house for $400,000 in a $400,000 neighborhood. Well, guess what? You're hoping, wishing, and praying that it goes to 500,000, and it doesn't because the comps don't support it. You have to buy with some equity built into it. So do we have an uptrend in the higher time frame? Go to your lower time frame and look for some equity, like a dip. Here's a dip in that uptrend, would provide a buying opportunity, right? And it's kind of moved up from there. We would like to see a pullback, and we could get a pullback back to trend line support, probably in the 107 area. If we get that, then you look at buying in discount. That's what you want to do. So that's also key. That's a bonus. So let's go ahead and take a look at. We have some Japanese data coming out. I don't think, if anything, it'll probably make the yen weaker. A little look at the USD JPY, which actually might benefit, but it's topping out. We're in this. We've been in a range too with the dollar yen after getting to that 134 whole number round number area. Might get some rejection and a pullback from there. So the long yen thing might work out perhaps if we stay below 134. Okay. Bulls versus bear, I'm cautiously bearish, but this thing breaks and goes north like in a flag, starts flagging 135.10, 135.25, 135.50, 134.50, then we can go a lot higher, right? We have like the makings of an inverted head and shoulders, and we can go back up. We can go back to 135 easy if we break and close above 134. Okay. Let's look at the indexes. Indices. Sorry, indexes. Indices. Okay. And I'm looking at the S&P 500, and we're at 4137. I'll look for a pullback to 4100. I'd like to see the stock market weak tomorrow, and that would be bullish for the rest of the week. If the stock market is strong tomorrow, I would be very fearful that there might be something brewing somewhere. Up on Monday, usually down Tuesday, Wednesday, Thursday. If it's down, if the S&P and Nasdaq are down tomorrow, that's great news. That means you can get in at a discount, buy some really great things at a discount to ride up. Because usually technology does well during the second quarter. We're in the second quarter, right? Already. 2023, we're already in the second quarter. And technology usually does pretty good, pretty well, right? English major, right? Yeah. I'm juiced up on cold medicine. Thanks to James. I was going to take a break. He says, Greg, we need Bulls versus Bears. We gave you a pass for Las Vegas. But my goodness, I gave so much of myself. Can you imagine being in a mastermind with your students in a house, and you're talking about trading and food's coming in, and you got food and beverages and snacks and we got a pool table and we're just talking about trading, and I got three big screens going, and it was a pip-palooza. It was a trading fest. And then we traded like at night. We traded like the London session, people sleeping on the couch. It was just amazing, amazing. But I just burned myself out. My throat dried out, and I just didn't take care of myself because I wanted to give myself, help people and talk to people and share with them. And it was a great experience. I do the same thing again. And that's why my team is probably like strap me down. It's like, Greg is done, go home, go back to your room, leave Greg alone. But I was so happy to see everybody. Pandemic, we couldn't touch each other. Everything was on virtual. So seeing them, awesome, awesome. I have the best tribe in the world. I love teaching on my Monday coaching classes and my Tuesday boot camp classes. I love teaching those. I love sharing with them. I love hearing their victories and even crying with them when they're not doing so well. But when they shine and they have their certificates, Okay, we're going to continue with the Nasdaq 100, starting with the monthly chart, and we can see uh, similar patterns. The S&P, higher highs, higher lows, and nice big break to the 13,087 area. You have what may be a harami, but no, this is a monthly chart, and the month has just started. And so we've got plenty of, I mean, we're halfway through the month actually, at April 17th. So we could see price move up some more, but we're in an uptrend. We have a monthly uptrend, so this is very strong. Seasonally, stock market rallies in April with an average return of about 3-4% for the month. Not too shabby. But if we go down to weekly, we can see higher highs and higher lows, kind of topping out. You might see some type of a pullback, maybe, on the weekly. But let's go to a daily chart, fine tune it, fine tune this here. Oh, okay, we're going to get closer in, and we can see that we're in a range, a rising trend channel. Try to say that 5 times fast. Trend channel, trend channel, trend channel, right? So, and usually what happens is when price gets to the top of the channel, I mean, you have to violate all these lows, but we're in the same zone, same area, right? So this is kind of rough, and we've bounced off that area, and we may, probably, I mean, we're kind of like in between. I mean, if you did it this way, we're like in between this channel. But we did, these were higher lows and like a higher high. So we have an uptrend that is playing out. And so I would be bulls versus bears. I would be bullish the Nasdaq, especially we got a nice little kind of a pseudo engulfing candle pattern right there. Like it's undecided where it wants to go from there, but we can see a retest of the highs right here at the 13,219 area, and we're at 13,089. So that's like 130 points. Pretty good move on the daily chart. Go down the 4-hour chart, and we can see it a little more clearly that we are stepping up, moving on up like George and Wheezy, moving on up, and we could probably see tighten that up. So we have room to run to the north side here, right? Try a different color. It's too red. Okay, so that 13,028. Look at the S&P 500, SPX 500. Similar pattern, same seasonalities at work for the S&P 500. If you trade that, which means our euro, and if you plot this S&P 500 and you compare it to the euro, you're going to see some, it's like, wow, you would think that the US dollar would move in the same direction because it's the US economy, right? But not necessarily, right? You can see that the dip that we had in the euro, and then now we're rising up as the orange line is the euro, the candlesticks are S&P, and you can see that they, move in a similar but not exact fashion. I'm just trying to get this squeezed together so we can kind of okay, so there we go. So in fact, we had the sell off, bounce, rally, right? But if you put the US dollar index, it's just the opposite. Going down a weekly chart, we can see similar. Look at the movement of the euro, the movement of the S&P, almost mirror image, right? Going down to a daily chart, and they're like moving lockstep with each other. right? So S&P 500, we looked for it. We're short-term bullish, so maybe a sell-off tomorrow. In fact, we can check CNBC and look at the futures and it's the overnight market. And actually, the futures are up. Uh, I would like to see them negative because usually it sells off on Monday, then it rises on Tuesday, right? We got big bank earnings coming up. So it might be very interesting to see what will go on with JP Morgan Chase in the banking sector, given that a lot of the regional banks have suffered because of the Silicon Valley um, bank debacle, right? Now, if we see a rally on Monday and we close up on Monday, then we might see a turnaround Tuesday in which the market actually collapses. Um, you know, being at this toppy range here. So, but it'll be a buying opportunity. Buy the dip. This is kind of overextended, and maybe we get a dip where we can get a nice discount. But they'll talk how bad everything is and the recession and all this other stuff. But a lot of times they talk that stuff to shake you out so they can buy it from you cheap, right? So you want to wait for the reaction, wait for the pullback. Bulls versus bears. I am short term bearish, very short term, like a day, maybe a day and a half, and then I look for prices to continue higher. Right? We had a big dip, so we may see a little continuation of that dip and maybe a move higher. Okay. The other thing that's not in the economic calendar is the Bitcoin. I'm sure as Bitcoin becomes more and crypto becomes more part of the financial system for moving money around, that it would be, uh, you know, you'll see some quote. Right now, it's treated like a risk-on asset. So it seems like it goes up with the S&P. It seems like it goes up with the euro. You know, it seems like it goes the opposite of the U.S. dollar. And we can see that it's been selling off after hitting that I don't know what we're saying. Oh, I know why, because we've got the euro on there. Okay, now we have prices. Yeah, we hit that 30,000 mark, and we're kind of pulling back. And if you put a Fibonacci on this monthly chart, we're probably hitting some type of Fibonacci resistance point at that. Yeah, the 23% retracement. We've been sitting around that for a bit. 28,042. And I was thinking we get a little higher, maybe into the 3652 area. Because if we're moving in the same direction as the S&P and Nasdaq, we might get some type of a pullback, and it might be an opportunity for this to move higher. So I'm actually constructively bullish on the on Bitcoin. You can see higher highs and higher lows. Nice structure, little structure, people. Yeah, Greg knows structure too, right? However, we're topping out, and I like to buy it back at like 28,000 for a move higher to the 32,000 area. Okay. So that's it, guys. I want to thank you for joining me for Bulls versus Bears, the weekly forex forecast for the week of April 17th, 2023. I hope you found this informative and useful. Make sure you like, subscribe, share, and place a comment below if you like to know what you learned, a golden nugget that you pulled out of it, or maybe a suggestion for some other content. Okay, I appreciate you. Thank you so much for watching. And if you need a mentor and want to shorten your time and get access to a $100,000 trading account, then go ahead and click the link and register on our website for our free masterclass, 4 Pillars to 6 Figures. Okay, Greg McLeod signing out. Love you. Peace and pips.
If you felt a spark here and want to see how these principles can be used in your own trading, go to www.elitetradersuniversity.com/apply to book a free session with our team. We have helped hundreds of people remove the frustration and obstacles in trading to become consistent, highly profitable traders. These are proven principles that just work. Happy pipping!